From the macro side, how much really does the president even matter?
Well, I think it matters, but it's hard to trade, right? Because what the president does is, he's got policies he wants to advance. It could be on the fiscal side, could be trade related, and these things take a lot of time to put into motion. And I think it's hard to trade that. I think investors are better off focusing on, what's happening today with the growth and inflation matrix, and try to understand how that's going to affect the next 2 to 3 months. So, I think, looking ahead, it's something to position for sure for allocators, but I think for traders, it's really hard to monetize political developments. I don't even try it, honestly. It hasn't worked for me. Maybe it can work for some people that can handicap these things, but I'm not one of those people.
Yeah, and I started off with that because so much energy out there right now when it comes to the indexes, which I mostly trade, and even when it comes to, bond markets. I always have felt, for doing this for decades now, that the president themselves never seem to matter that much. I mean, obviously, policy matters. As an American, it matters, and all of those types of things, of course. But when it comes to the way I trade or invest in the market, it typically has this initial surge where you might see something come in that matters. Like after Obama, I thought maybe there was something to do with crude oil. There was a trade there. Even Trump, I thought oil a lot of times is a good trade. But for the most part, it never seems to be anything that has legs. I just wonder what your thoughts are on that.
No, I think you're absolutely right. I think these developments take time to work out. If you focus on what's happening today, there's a lot more scope for profitable trading. For example, right now we're in the beginning of a Fed cutting cycle. Markets have priced in, a cut for September. Markets have priced in, anywhere between 4 and 6 cuts for next between now and the end of next year. And I think it's easier to focus on how those developments are going to play out and where the trade is embedded in that, as opposed to politics. Politics is just such a wild card. The outcomes are really hard to handicap. We can have a reasonable idea and build assumptions on what we know around our portfolios, and put trades on around that. So, a good example, for example, is with the cutting cycle that's starting up. What's the trade there? What are the interest rate sensitive sectors that could benefit from that? I'd rather focus on that than on the election, which I have no clue what's going to happen there. But I can tell you, when rates start getting cut, there's going to be movement in asset prices. And again, some of that's priced, future developments that will really kind of unfold as the data unfolds. Yeah, that's the way I approach that problem set.